Is the CPF shielding going away soon? Let's discuss in this video. You know, recently there is a Zaobao article, right? The Chinese newspaper of Singapore, mainstream media, talk about this article about whether CPF is going away soon, and I'll talk about it. But before that, let me just give a bit of definition between what is the CPF shielding all about. So CPF shielding is essentially a strategy where you shield most of your funds in the higher interest special account that is earning you 4% instead of the ordinary account earning you 2.5%. And essentially how you do that is that for people when they are from age 54 transitioning to age 55, that's when the retirement account is set up, right? And when the retirement account is set up, the RA, it needs to draw funds, and the order for drawing funds is firstly from the special account first. So it will take money from the special account first to build the retirement account. Subsequently, if SA is not enough, then they will take it from the ordinary account, the OA. So how the shielding strategy works is that you want to empty out your special account as much as possible so that when the RA wants to collect money, collect funds, it can only collect so much from the SA, okay? And then the rest of it has to collect from your OA. So essentially, when your SA is invested, your RA cannot touch the money in your invested SA portfolio. So that's why it is shielded. And once your RA has been created fully by your OA funds and some of your SA funds, then you can start to withdraw. And that's how your funds could go back to your special account to earn that attractive 4% interest. So the end result is you have a very full RA account, you have a very full SA account, and you have a very minimal OA balance account earning you 2.5%. Whereas your SA and RA are earning you 4%, which is good, right? You get the max optimized interest for CPF. And why people really do that is because they want to treat the CPF special account like an ATM, whereby they could withdraw any funds above the full retirement sum and when they have set aside their RA. So I think that's a great move, and I've talked about this many times in my previous video. And why is the government clamping down on that then? I'll explore with you this article after a word from the sponsor. I am very jealous of you all. Jealous of those people who have not signed up for Weibo account, because Weibo just launched a record high promotion getting you $150 worth of cash voucher. And since many of you still have questions on the qualifying criteria, let's go through some of them. First deposit, you must have a $2,000 first deposit. Now, even if you have used that $2,000 to buy some stocks and the stocks has fallen to less than $2,000, that's fine as long as you have not made any cash withdrawals. Next, you need to buy one US stock or ETF worth at least $100. And you can choose any stock, right? I mean, you can choose Apple. Apple is at around 130, 140 levels, way above $100, so you'll be safe. The third criteria is you have to make one option trade. So you can just look at Apple options. You can buy a $70 put expiring this Friday at like 1 cent. So 100 units of it will be $1. And lastly, you have to hold your deposit for at least 30 days until your cash voucher reward is credited. And that's how you can use the referral link down below or scan the QR code right here to sign up for your Weibo account today. Okay, so on 5th October, the Chinese newspaper of Singapore, Zaobao, wrote this article titled 约2%年满55岁公积金会员去年屏障特别户头存款. Okay, so I just said the whole title in Mandarin or Chinese, but basically what it means is that 2% of CPF members, eligible CPF members, have done the CPF shielding strategy last year. That's the title itself. No attractive clickbait, no fancy thing, but the devil is in the details, right? What did the article talk about? It briefly described what CPF shielding is, like what I've done earlier. Okay, just explain it. What is it about and why are people doing it? Mainly because of the high interest given by the special account. And CPF board has the statistics that 2% of the general population above 55 has done it. Even Minister Tan Si-Leng, Chen Shilong, mentioned that the CPF board is aware of such strategies or tactics to actually optimize the CPF. And they said that they will take action when necessary. Well, the main idea presented was because CPF shielding actually carries a risk when you are investing in the markets. There tend to be market risk and market fluctuations up and down. And for those people who are not well informed of this kind of risk, then they may lose their CPF retirement funds. He also mentioned that financial consultants in the industry need to share this piece of knowledge of the risk involved when doing CPF shielding when they are advising their clients. Otherwise, they may face some legal consequences. So far, the article sounds really okay, right? Nothing really wrong with it. But I think there's some fear induced in people whether the CPF shielding will be still effective when they've reached 55. But let me bring you 2 Easter eggs for this article. First of all, do you realize that no English media, mainstream media has reported on this news yet? Your Channels News Asia, your Straits Times, none of them reported the same piece of news. Because usually when one media announces this kind of news, the rest of the media will just copy, right, and translate in whatever language. But you realize that only Zaobao is publishing this article. CNA and ST has not reported it. So it is really strange, right? And I went to do some research about it. And I had a vague idea that this topic actually appeared last year when I just started out YouTube. So I went to do some research and found that it has the same title, No More CPF Shielding Soon, by our favorite author Tan Wee Boon. So last year, Straits Times has already wrote about this, that the CPF board is already aware of such thing and may clamp down on it. And the main thing about financial consultants not giving the due diligence or do your own research kind of thing, advice to the customers who may not be well informed of the financial risks. So I think it's time for me to stand out as a small creator in the space and ask some questions, right? I think firstly we must ask why the government is concerned about CPF shielding, because essentially it creates an information gap, right? Those who know will benefit from it and those who don't know will get the worst end of it. And likely those who can do CPF shielding are the more affluent level, okay? They have higher income, they have more savings, whereas those who cannot do CPF shielding is because they have relatively lower income or they don't contribute to CPF, and that they cannot benefit from such CPF shielding strategies because even if they know it, they cannot do it. So I think the solution to this is quite direct. Instead of not letting people do CPF shielding, let them all be informed of such CPF shielding strategy exists so that people can work towards it, right? And the best way to work towards it is by watching my channel, because I give some very good CPF strategies and hacks that everyone can apply. And even if they do not have very good CPF knowledge and they don't know what to do, they can watch my channel on other topics, investing, earning, saving money, where they can put the money to best use. So the best thing is to subscribe to this channel right now so that you can be informed of both CPF knowledge and how to earn more money or save more money. But if you are too shy to leave a comments in the YouTube section, right, then why not hop over to my Telegram group? Because over at the Telegram group, I'll have a group of experts and professionals able to answer your questions with regards to personal finance, credit cards and CPF as well. So join me at the Honey Money Telegram group. So I think the next thing that government is concerned is that financial consultants are not doing their due diligence to advise their customers the risks of such products. So the solution is not to clamp down on it, but to educate the public. The more people know about this strategy, the more they are well informed and not be led astray by the financial consultants, the so-called consultants, right? You need to learn more of this kind of education and knowledge instead of watching nonsense TikTok videos and dancing videos to enrich your life, right? You need to watch more of this kind of content, and in order to do that, that's where my channel you have to subscribe. Anyway, the point is, the more you're well informed, the more knowledge that you have, the less likely you will be led astray by people who know what they are talking but you don't know what they are talking. So it's very important for you to build up your knowledge on personal finance and CPF as well. One more thing the CPF board is concerned is that when people actually do such investment strategies with CPF shielding, then there will be market risk, right? And their investments can go down and maybe led to a downward spiral and people lose their retirement savings. I think one thing I need to highlight here is that CPF shielding is a short-term strategy. It only lasts at max 1 week because you just want to invest and shield your SA for that 1 week period, and after that 1 week period you will just withdraw. So there's very little impact of the market can do to you in 1 week. Not only that, the main investment tool of CPF shielding is to buy like low fluctuation, like the bond fund, right? Your Nikko AM short-term bond. So bond is a relatively low risk asset and at the same time very low market fluctuations already. So what else, what kind of risk are you talking about within that 1 week and also in a low risk fund? It's a relatively small price to pay in order for you to earn that higher interest rates after you have unshielded your SA. So I think that's a risk that everyone has to be aware of. Rather than just telling people the market has risk, you should not invest your SA and all that stuff. And let's take a look at some alternatives, right? What can the government do instead of clamping down the CPF shielding strategy? I think firstly, the government needs to understand why people need to do CPF shielding. Now, you see, the CPF shielding main concern is that you cannot transfer your OA to SA after 55 because once your retirement account is set up, the most you can do is from OA to RA. Okay, you cannot transfer transfer OA to SA. And you see why people want to transfer their OA to SA after 55 and not to the RA is because RA funds are more ring-fenced for your CPF life payouts when you've reached the age of 65. So you'll go to that CPF life payout pool instead of your withdrawable pool. Whereas your SA after 55 can be withdrawn if your FRS has been met by the RA, right? So that's why a lot of people are trying ways to transfer OA to SA. So if you can allow that OA to transfer even after 55, no one will do CPF shielding already, because you can just do it freely. And also the other fact is that when RA is formed, it is going to deduct from the special account first. If there's a policy that allows you to choose whether you can deduct from your ordinary account or special account first, okay, then most people will choose the ordinary account, right? Then there's no point for CPF shielding already, because your RA can deduct from OA first. In a sense, it helps you shield already. You don't even need to shield because your SA will be at high amount, your OA will be at low amount after that RA is formed, taking out funds from the OA. So I tell you, CPF board, you see, you know the consequences and you know that you don't want people to land up in these consequences, and yet you're not allowing people to do that. But obviously you understand why you're doing that, because it is a high interest account in SA, and for people to really optimize and use their SA for such thing, I think is discouraged by the CPF board or something, I believe. But if you really want to fully clamp down on CPF shielding, you just have to do this one move only, and then all CPF shielding strategy will be gone. I will not be making any more videos on CPF shielding. You just have to disallow people to invest their special account. That's it. No more investment using SA account. I think then everyone will be fair. No one will complain already. Because the situation now is that you allow people to invest in the SA, but you give like very little eligible products that can use SA to fund them. So essentially, people cannot use SA to beat like 4% return. So it's better to just leave their money in SA. So that's the kind of market risk you're talking about, right? Because if you're investing, you want to make sure that the opportunity cost is worth it. And in the special account sense, the opportunity cost is 4% per annum. So you have to make sure that your investment can yield higher than 4% risk-free return, which is very difficult based on the eligible funds that can be using SA to invest. So what I'm saying is just my own personal opinion. I felt that if government really want to clamp down CPF shielding, there's just one switch you can do it. Just disallow SA investing. But if you really want to allow investing SA, then you don't encourage CPF shielding, then why not tweak the policy such that it allows people to transfer their OA to SA after 55, or you just allow people to see whether retirement account, which funds can they withdraw from, which account can they withdraw from. I think that's much more useful than keep thinking about how to not let people benefit from CPF shielding, right? So if you want to learn about CPF shielding and even an enhanced level of CPF shielding, then refer to my previous video over here, because I'll talk about the main strategy I would use if I turn 55 and CPF shielding is still valid.